We are back this time live because there's a lot of rocking and rolling in the markets, a lot of talk about this correction or the effects of the tariffs that the U.S. is putting on other countries for various reasons. But we wanted to take the time to talk about how these tariffs are affecting the major indices. The indices only, that's what we're concerned about. So, you can see this source, Quant Data, went out and I think this is a tweet or they posted on X. They talked about how much SPX is down. We're just really talking about today. So 1.7 points today. Not too bad, but when you consider the overall picture that I'm going to talk about, it is rather significant. Um, DJI or Dow Jones, 427 points. Not that much, less than a percent. So not too much of a drop today, but people are gonna feel this pain. So I get it. And then the NQ, of course. So slightly down. Um, that's the Nasdaq 100 futures, 2.6%. So not too bad, but anything other than good is bad when we're talking about the financial markets. So with that being said, let's jump right in and let's talk about what we see. Remember, we're going to be doing this through a harmonic lens, so we do things a little bit differently over here. We view the market as it moves harmonically and how it reacts to major and minor Fibonacci ratios. So let's just jump right in. Leave your questions and comments, and I'll try to answer them during this live. This time I do have the chat going, not like the last couple that I screwed up. So I think I know how to do it now. So thanks for rocking out with me. Thanks for your support. Thanks for hanging in there. And thanks for helping grow the Harmonic Trading Club because you guys understand how passionate I am about this and how much I feel that no matter what your trading system is, you need to really understand how the markets move harmonically. So looks like there is a viewer in the building. I can't see who that is, but thanks for joining. Before I get started, could you guys like the video, give it a thumbs up so that the YouTube algorithm can kick in and start throwing this thing out there and make sure that your notifications are on now that it looks like we're going to be rocking and rolling. We got a lot of content to talk about, a lot of content to cover pretty much daily. So we will jump right into it. So we're going to start with SPX, okay? Um, Now, here's something I do want to say. People are talking about what's been happening since the news of the tariffs, but they somehow seem to forget that this fall actually started February 19th. That's almost a month ago. Um, I don't think that's fair at all. Like, in other words, no, it's just nothing new. This actually started a way back, and even if we wouldn't have had the tariffs, you could see, and we're going to get to the breakdown of the advanced pattern, of course, because the market moves harmonically, whether you like it, hate it, and understand it or not. But um, to be honest with you, it looks like there is a lot of movement, but it's just ebbing and flowing like a market normally does. Let me just go through that part first, and then we'll get to the rest of it. And I'll try not to keep us on any individual um, instrument too long. But if this is normal for a market. So no one said anything when this stuff was happening, when it was just ebbing and flowing up and down, because a lot of people don't know that that's what's actually taking place as it's doing its thing until you reach a point of exhaustion, and then you're going to see a rollover like that. So I am saying that to say that, no matter what, the bullish action had ended a long time ago. You can't see and understand this stuff unless you're able to step out and just take a bird's eye view, a bird's eye approach to it, and see that really SPX started consolidating a long time ago. You know, so the action in which it was just completely firing off and trending up, like you see here, these long, tremendous spikes. That stuff actually cooled off a while ago, but no one wants to talk about that. That's okay. So I wanted to point that stuff out before I talk about where we are and what the possibilities might be. I'm not that confident in them, especially when you talk about counter trend trading action, meaning even considering remotely that there would be an opportunity that the stock, that any of these markets, these indices that cover, like, 500 company markets, 2,000 company markets, that any of those things would ever correct for any reason going forward, at least over the next few days or maybe even few weeks. I just think it would be silly to make that type of suggestion. And no matter how successful advanced patterns are, especially when you're talking about the ones that are that have a higher success rate, this might not be the case. And it does kind of pain me to say that, because you guys understand that I do have some bias when it comes to that. I can be open about that. But this could be a case that if this doesn't stop, typically, I put it like this, typically, we would absolutely expect this butterfly to hold up for us. Typically, when this comes and fills down here at the D leg, we would expect a counter trend trading opportunity and a reaction to get long. But with what we're doing right now, thanks for the like, whoever that is, what we're seeing and witnessing right now, it doesn't seem so likely, even though it has a whole lot of other things going good for it that would show that. Let's say if we looked at RSI, the relative strength index, showing us that, yeah, this thing is actually, starting to, the selling is slowing, because RSI is a speed indicator. You're measuring the speed of transactions, the speed of the buying and the selling. And this indicates, yeah, the sellers are starting to slow down and the bulls are starting to come in, but they can't take it. They're trying. It's been oversold a lot lately, but no matter what, it hasn't been oversold enough for the buyers, for all of the companies in the index to do well enough to push at least SPX 500 up. And good thing, SPY is actually something you actually can trade. You can trade the entire index. So let me not get lost. But you can see, I'm looking at the 4-hour chart. This would basically make up today. So that little 1% that I talked about, that it's down, it represents, if I just come back for a second, just letting you know, it's really not that bad, because although it wasn't the best of days, it wasn't as bad as yesterday, and it is still a green day, right? Or it's kind of like right on the money, right? So the news came and tried to kind of like doom and gloom it a little bit. They're going to try to scare and fear monger you to death. What your job as an investor to do is to be able to take advantage of these opportunities. Let me tell you what I mean by saying that. Your job in this whole thing, right, was to, one, right? I know everybody's not going to get this, okay? And that's okay, all right? One, you had two jobs, okay? One job, remember, we look at things through a harmonic lens, okay? Your first job was to know that this thing was dead to rights when that butterfly happened, which is the same thing we talked about, the big one, which of course we're probably not going to get that lucky on the big one, depending on what happens. We don't know. We'll get to that in just a second. So your first job was to understand that you should have been short in the first place, okay? Okay, because whether you like it, hate it, understand it or not, I'm explaining to you how these things work. Your job was to get short at the peak up here at 61.55, period. End of discussion, okay? You were supposed to have been short going back to February 19th, period. Okay, your second thing that you should have noticed is the break and close right here when price action closed below the structure, creating new structure lows. Okay, so when you got a lower low, lower close, a break beyond this previous structure, you should have been looking for the correction that came up, and then your entry was here to get short in the first place. That was the actual setup. But there aren't too many people out there that know what they're doing or know what the hell they're talking about. So you can't talk about what's wrong with the market falling. And the market's been falling for a month, not falling, but it's been correcting for a month, giving the investors shorting opportunities, as I showed you, powerful shorting opportunities. I don't know what to tell you about the people out there in this industry that don't want to be real with you and tell you what's really happening. I can't help with that. All I can do is help with how I'm helping. And that's to tell you that the market moves harmonically, creates advanced patterns, harmonic patterns, created a bearish advanced butterfly pattern that filled to the T and rolled over. That all I can tell you is that was your trade. No sweat, T-Mac. You know what? I'm gonna be trying to come on and do these a lot more frequently, so hopefully you catch the next one. Your trade was back up here on February 19th. Oh, yeah, period. And you could have exited whenever, but you would have made a profit. So you can't worry about the profits that you're losing right now because different stocks that you're trying to buy are falling when the market moves both ways. I did a video the other day um, talking about and showing how the market moves both ways. It moves up and it moves down. It's not a one-way street where there's only buying. The shorting opportunities are just as powerful as you can see right here on my screen. All right. So the play here was to be short and to maintain. When the market broke and closed down at 58.65, you should have known this thing ain't coming back. And that's the truth, people. It is the flat out truth. When this thing fell down here and closed in this area right here, this was confirmation. This was confirmation that it's over. Break and close, you're going to get a correction. In this case, that correction was probably 38% major Fibonacci level, which is going to happen. You had another opportunity to enter short again here to go for this ride where it is right now. Make a tremendous amount of money. Even I wasn't keeping my eyes on that. But you look at what I'm telling you and you tell me I'm lying. Okay, now I done messed up all the chart and put stuff all over the place as this thing is continuing to fall because people probably want to know, okay, what can we expect? Okay, what we can and should expect is the same thing that we got up here from this yellow one because it will get respected. I don't know to what tune or to what degree, but they're absolutely, because you see the bulls, there is some buying pressure. Now, the only other problem with that is if I go look at the volume, there's probably not going to be a lot. It's all bearish volume. There's not enough green volume to even turn that thing because people are closing their positions and some people might be taking short positions. Closing that's what's causing it. People are pulling their money out. That's dragging it down. People are shorting the market. That's dragging it down. So we actually had to do a lot on on SPY, but just to try to bring that home, 56.74 is the mark. Okay, 56.74. We probably won't see any relief until 56.74 when this butterfly pattern is completed. Unfortunately, that's what we're looking at. I don't care about the little tiny green stop right there. We can probably expect this thing to fall down a little bit more. And then, now I'm not even saying that if you trade SPY that you should be taking a long shot. My suggestion would be to, if you've been hurt already if this was one of the worst weeks of your life, I know it was a tough one, then you probably want to fall back and just leave your capital in your account alone and just give the market some time to settle out until it's back on track. That's what I would say. Don't get down here and say, and this is the daily chart too. So don't get down here and say, okay, well, Trey said when that bullish butterfly pattern is filled at 56.74 that I should go long. I did not say that. I said this is the most likely opportunity. Just let me add to that. The Harmonic Trading Club, this is an educational channel. We do not give financial advice. We do not manage capital. We do not provide trade signals. Trade the markets at your own risk. These videos are made for educational and entertainment purposes only. Okay. So that's what SPY looks like, at least to me, that this ain't over yet. Oh, and the other reason is because as the market is moving and continuing to create these equal measure moves, like A to B being equal to C and D. If you notice, there's two black lines in here. I don't know if you can really see them, but I've already cloned A and B and put it on C and D, and that's what's giving us this entry right here. So the market's going to want to naturally, in harmonic fashion, want to complete this pattern before it does anything else. Now, if it does complete it, I don't know how much the reaction is going to be. I don't know if it's going to cause a complete reversal. I don't know. I don't know if it's going to cause the market to just continue creating those, go retest this, and then go break it and close lower. I don't know. All right. So all that out the way. Oh, the last thing I will say about this before I move to the next one. Since I'm live, I can stay on here a little bit longer and I can pack it with lot more information than I normally would on just a standard recording. But yeah, you can see the market's going to want to come down to where the structure is. It's going to want to test these guys here where the structure is, which is what you see it doing. Remember, look left, structure leaves clues. Okay, so it's going to want to go to see when is its next time that it can go another direction, stop, hold up, or give traders with a bullish bias an opportunity to come in. So it's a lot on SPY. So moving on to Dow Jones. Dow Jones, kind of similar, okay? So you see it's starting to cool off a little bit right here, starting to cool off a little bit. All right, so not nothing too extreme. It's kind of like right in the middle RSI wise, but that is a bullish bat pattern. I would suggest that if this thing continues to fall, that this bat pattern comes down and fills, and then that's when you might see some relief. I don't know how much. Typically you would see, you'd see, somewhere up to 61%, 61, 618. You'd look for a correction up here before the market starts to kind of, consolidate or figure out something else, or we never know. You would look to typically see something like that and then maybe come down or whatever, or go back up and go test even higher levels. But this would have to fill first. We won't know anything. Remember, we're looking at this through a harmonic lens. I wouldn't suggest that just because you do see maybe 2 or 3 days, going back to the 4th and we're going into the 7th, just because you do see 3 days and things, it looks like it found some support. I don't think that that's the case yet, because too many people are closing positions and things of that sort. And we'll see all of that activity come through tomorrow once the market opens. But yes, there is a pattern that's forming. It won't be ready to go. That'll give anyone any kind of confidence that the market might be ending its free fall, even temporarily. All right, that's Dow Jones. And remember, you should wonder, like, wow, that's crazy. They actually all do have a present harmonic pattern on them. Remember, because this is what happens. Dow Jones and over here, the NASDAQ 100. So this one is even more interesting because it has actually completed its pattern, which is a bullish Gartley pattern. A lot of people weren't aware that it completed one of probably the most powerful, successful pattern that can be fulfilled. And its founder, H.M. Gartley, said that, don't know if it's true, this is what he said, but he tested this over a 70-year period. And he said that over a 30-year period, this pattern worked, and you got something close to like a 618 retracement off the C to D leg, off that leg, or maybe even off the entire move A, because it's based off the A to B is equal to CD pattern. That's an equal measure move. This A and B is just cloned over here to C to make D. Bullish divergence on the RSI tries to say that for the 100 futures that it might survive. I don't know. I don't have a lot of confidence in anything right now. But that's a wick down. That's touching it. And this would give us what you guys hear me talk about when I say next bar market, where this closed and then you would enter on the next candle. So that's basically what's playing out live. If it weren't for the conditions that we are in right now, we would be ready for a tremendous turnaround. But because of the market conditions and because of the fundamentals and things that are taking place in the background, it's not likely that this thing will survive. I don't care how much. Remember, look left, structure leaves clues. 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 I don't care if the structure is there. There's just too much going on, and there's just too much uncertainty in the markets for this to hold. Could it? Anything's possible. Everything lines up for it to work. It's got a lot going for it. Oversold, bullish divergence, pattern filled, at structure. It's got a lot of stuff. It's scoring high in terms of a high combined technical score, but there's nothing to suggest that we're going to see a turnaround. We'll have to, we have to basically get through next week to see, because this thing itself too has been falling since, just like on SPY, February 18th, February 18th, February 19th. This is nothing new what we're experiencing right now. The market is just there. They just can't help it with the whole fear-mongering thing. They can't help themselves. That's what they do. It's all doom and gloom. It's all the markets crashing. This Why didn't they say that when we had a similar correction back here in December? Nobody even noticed it. Nobody said a thing about the correction that began December 17th and did not end until January 13th. No one said a single thing. But now on this time, no one actually said a thing here until this week. Okay, fair enough. I don't want to beat a dead horse. You guys get the gist. Full field advanced Gartley pattern. We don't know what's going to happen because there's too much uncertainty. All right. Okay, this is a very, very interesting one. Very, very interesting one. The NASDAQ 100. Some of the same principles. Field advanced butterfly pattern. Got a reaction, and it even came back to retest. So I'll talk about this again. It's going to be like the same thing, okay? This has been dead to rights off this double top. There was never going to be a long opportunity in the first place. We're going back again to February 18th, 19th. That's when this stuff started, okay? I just don't like people lying to you. This thing has been dead to rights. There was never a chance to go any higher. If anything, a real investor should have known, hey, it's time for me to short that, at least to the tune of, I'll tell you how much before getting out the way. At least to the tune of 21,143. That's a 618 retracement from the V. From the low, swing low to swing high. And then you're out the way. Once this thing broke and closed, once he broke and closed below that V, which is right here, you knew it was over. There was no coming back after it broke and closed. That solidified this double top. It confirmed the reversal. It was confirmed in front of your eyes. So you got to basically what we're talking about is a confirmed reversal. And someone wants to scare you and talk about a doom and gloom type thing that just happened when this happened a long time ago. But no one wants to be honest with you. All right. What's at stake? What's on the deck? Okay. So it does respond harmonically. It even does a double top pattern. Okay, it did react to it in dramatic fashion like it should because it is a reversal pattern. Okay, and then it's breaking and closing beyond the V right here, which is the real confirmation here. Okay, that's the real true confirmation that this thing was dead. The only thing that we can look for is a couple of things I wanted to say about it is that the next level of structure is right here. It's right here at the 618. The 618 retracement of the very low structure here. This swing low, this is all apart. This is all one move. This swing low to this swing high, and this is 61% of the way down. Okay. So the only reason that there might be any hope there is because it's coming down and it's hitting the golden ratio. And depending on, we're not too far away, right? We're maybe a day or two away from that happening. That's why I put a question mark. When you get there, there might be some relief. How much? We don't know. Back to where we were, I highly doubt it. Maybe just a retest of the structure up here, and that will be short-lived. Maybe a two or 3 days of happiness where people are not crying anymore, and then there's no telling because after he's tested the 618, comes back, retest the structure here at the V. After he's going to want to come back and violate that and come down here. Now 618 is already extreme enough on the correction. Right. That's why I put a skull here, because if he comes down to hit 786, that's extremely a deep correction. And not only is it extremely deep, it will take it back and wipe away all the profits for the last 52 weeks, which is 1 year. This is the 52-week low right here. I'll go ahead and line that off. This is the 52-week low right here. So this is where the price was a year ago. So from here, he comes down. He's all of this good stuff. All of that stuff is being wiped out or sucked back in right here. If what I just suggested happens, you go down and wipe away all the profits for the last 52 weeks. Maybe there will be support there at the 52-week low, and then you might get some type of reaction. It's really hard to say. We need to see how far this drops. Me looking at this, it looks like probably that fall to that 618 retracement. And let me just go back and look real quick and see if he already crossed the 382. which is the first. So he already crossed the first guy. So he's going to be looking for the second one. So he's already crossed the 382, which is a major Fibonacci retracement level. He's already crossed that and closed below it too. Yeah, all that kind of good stuff. So 382 first, then 618, then 786 is going to be a very, very extreme correction, taking this back down to its 52-week low. And also notice what's there. Look left, structure leaves clues. You see the structure there. You see the structure there. You see the structure there. That's where the market might want to go. Okay, I'm not saying for sure, but it's very likely that there's nothing in the way to catch it. For one, there's nothing in the way to catch it from where it is now. So that 618 is probably a lock. But if he violates that, he's probably going to go try to get that 52-week low from last year. All right. Russell. All right. The Russell 2000, small cap. Now, this is another interesting one. Who was that other one that was kind of filled already? It was this guy, right? It was a NASDAQ 100 mini futures. Russell has the same type of look. Okay. Russell has a filled and completed bat pattern, filled and complete. Hard to say what's going to happen because of the uncertainty, but it too is showing some signs of strength. Like this thing just really wants to fight back. It's oversold. It's bullish divergence. This market feels like there might be enough buying pressure coming into those 200 companies. It did come down and want to just wick down and fill. Close. Not yet. Did it? No. Very, very close. Just a couple of dollars from filling. So it's likely that you will get a little bit more selling pressure to come fill this. Is that 886? It's 893. Wait, hold on. Let me get that where it should be. This actually might be filled. 887. Sorry. Correction. This is filled. And that's why, let me just back up. That's why price action sucked back up. That's why they wicked down, touched it, and price action sucked back up. Okay, so that's why that happened, for an explanation. But looks like it's going to retest that area, comes up, and then comes back down. Okay, retest. And then we'll get a chance to see what's going to happen, if that thing is going to react. But like I said, there's so much uncertainty. It's likely that this guy, is powerful and as good as he is, could get completely smoked. So this could be one of those times where you just can't get long. You can't counter trend trade, and you can't get long. It's very, very likely that could happen. Be pretty ugly, because normally, typically, like on something like this, you're looking for a big pull up off that bat pattern. Sometimes it can take you all the way back where you came from. But we just don't know what's going to happen. It looks like what's setting up is you got the fill, you're going to come back and another retest, and then that's when we can start asking questions. That's when we'll say, okay, what's happening there? But like I said, very, very unlikely. I don't believe that. I don't believe that in the Russell 2000 it's gonna hold up to what's happening. I just think that there's too much time left, and there's just been too much damage done by people closing their positions, taking losses, and some people might be looking to short the market. Let me go over that one more time, because what I like is this does give me some opportunities to actually just like teach structural analysis. When you got when this initial high, okay, starting point, initial low, and then outside return, okay, outside return, correction or retracement, whatever term you want to use on that one. I'm looking at that. I can tell that's about 50%. That's about 50%. So I'll just measure it for the sake of the video. I'll measure it, and I know it's about 50%. I don't really have to. And I bring on the 50% and the 618. I don't need 382. I bring on 50 and 618 because it's going to be somewhere in that zone. And it's right at the 50. Just like I said, it's right at it's a 50% retracement. So the investor's job, his job that nobody told him, was to look at that and understand that you were going to be looking at an equal measure move. A to B is equal to C and D. That he had a 50% retracement, and that a 50% retracement equals a 1414 extension. Let me show you that I'm not lying to you. So if I grab our extension tool and I start from A and I go to B and I come back and I bring on the 1414, well, 127 is already there. But if I bring on 1414, which should be right next to it, This is where the market wants to go. And you see, it's right there in that zone. It's right in that box. It did what it was supposed to do. Okay, so people really need to understand that. It did exactly what it was supposed to do, is drop into that box a little bit down, just like the same way on the 50%, a little bit up. So this little bit push up into it represents this same little bit push in between the 127 and 1414. Everything happened as it was supposed to. But like I said, maybe a retest there. Have to see what happens. I don't have any confidence that any of these markets are just magically going to turn around in the next day or so. So that's Russell. That's the Russell 2000. Looks like it might be okay, but who the hell is to say? I don't think so. All right, and last but not least, the Vanguard. Okay, the Vanguard 500. This thing runs parallel and neck with SPY. It pretty much all the stuff. The price is very similar, maybe a couple of dollars off. Everything that SPY does, the Vanguard does. And it was the same way when I was on SPY, and I told you about that that bearish butterfly pattern that started all of this madness. I told you the Vanguard's going to do the same thing. The only thing is it did it twice, more devastating, and more proof that the market moves harmonically and creates advanced patterns and harmonic patterns, whether you like it, hate it, understand it or not. And people really need to stop lying to you. But even though it was the culprit on Vanguard that started this whole nightmare, okay, bearish butterfly pattern, same exact thing. Even before that, it tried in the form of a Gartley. He used Gartley to try to, oh, the arrow's already there. He used Gartley to try to devastate the market. All right. So this is nothing new. This has been happening. A tremendous drop off like that. Come back, form a butterfly pattern, and then just drop off and die. And the principles are going to remain the same in just a few minutes. We'll get to the end of this and talk about it. It's going to be the same stuff. But you were really up against a double top the whole time. You were dead to rights the whole time. There was no buying in the Vanguard 500. It just did not exist. Somebody's lying to you. This was your opportunity to short again on February 19th. So now you guys, all my viewers, know the date when this started. This started February 19th. This is nothing new. Okay? So that's when people should have been saying beware. And I actually have a video on these two, on SPY and Vanguard, if you go look at my playlist. Now, back to where I was. Once price action came down and broke and closed right here in the 530s, once it broke and closed below this 550s, right at that V, it was over. New structure low, okay? New structure low. So you come down here, you actually get it sooner than that. You actually get the new structure low here. And then you get another lower close. You get multiple sets of L3C. You get it here and you get lower close here. This is just the return, just the outside return. That's it. And the form of a double top and a retest. Nothing more than that. Okay. This is not special at all. This was in front of the investors' eyes the whole time. Retest. This was an opportunity to get short. There was no long or none of these things. That was the opportunity to get short right there and come down. But he's just ebbing and flowing. Now let's just watch the trend. Let's just write the trend in. Starting point, initial low. Outside return, new structure low. Outside return, equal high, new structure low. Outside return, new structure low. So where's all the crying coming from when this thing's been ebbing and flowing as a market does? Somebody's lying to you. And you're watching me show you. And unfortunately, it's not up for debate. Now, to finish this off so we can get out of here, everybody's got other things to do tonight. What's on the docket is bullish butterfly. Again, I don't know. I don't think it's going to survive. I think it's going to get smoked unless this stuff really turns around. I do see, what are we at? There's look left structure leaves clues. Let me just blot this off real quick. Let me just drag this over because I want to see how pertinent this structure is. Yeah, right in that spot. Okay, so you see it. You guys see where price action is going to want to go, right? You see where it's going to want to go. Look left, structure leaves clues. It's looking for structure, okay? It's looking for structure. If I come back, we're gonna do a grand finale like fireworks on this part right here. I'm gonna show you guys what really happened, okay? Now, in true Harmonic Trading Club fashion, somebody type in the chat what that's called, okay? And we will go ahead and write it in because that's where all this started. The market is acting as expected. Okay, I understand there are some fundamentals that are helping drive it, but you tell me, if A to B, watch this, I'll get rid of him just to prove it to you. If A to B is equal to C and D, that means I can clone this leg and put them on what is C. Okay, so this was in the works the whole time. There was no coming back, period. I don't care what anyone tells you. It's A to B, clone it, put it on C, C, D. It was over. The game was over. We weren't going any higher. And now this allows me to add more to it because this thing has to exhaust and correct back down now. I don't know what degree, but you can actually hold your horses because this might just be getting started. Let me tell you why and how. Because there's got to be a correction off this whole leg. C to D. 50% would probably take you back to your 52-week low. No, even more than that. If it comes back 50% on the retracement. I'm looking for the 52-week. 8 of 24. 4. It's right here. Here's the 52-week low right here. It's right on top of 50%. So let me bring on 382. And it's going to be right somewhere in there. Okay. So somewhere in between 382 and 50. This is where the market should find support. So this time we actually have a pretty strong projection. We don't know when or how long it's going to take for this to fall down to down here to, what is that, 456. We don't know how long that's going to take. But that's, to be honest with you, that's what's on the table. That's what's on the table. So at least now you know, so you won't be surprised. You won't be surprised. You'll say, I knew that. I've been hanging out with Trey at the Harmonic Trading Club and he broke it down. We're not surprised. We're not falling for the doom and gloom. Now we're going to either find ways to get short, or we're going to just leave the market alone and let it finish. And then hopefully everything is all good at a certain point in time. Then you can get back in the game because this is still a trend, right? Boom, boom. Outside return, new structure high. Outside return, structure, new structure high. So that's the way that it works. But for now, I don't think that our little butterfly is going to get us there. I don't think so. I just don't think so. It'd be great if that structure was strong enough to hold this thing, then we'd be back in business. And remember, this goes for every company. This goes for everything. This goes for the entire market. If that was strong enough to hold this thing, but we'll see. So that's all I got on this one. I feel like the people needed to see this, especially the novice traders and people who pay too much attention to the fake news. Sorry, I have to say that because I just proved it to you. Just stand by, be patient, get out the way, or, make sure that you're reticular, make sure that your eyes are trained enough to where you can take advantage of the market regardless of the direction it's going, bullish, bearish, or sideways. If you like this content, give it a thumbs up. If you're not subscribed to the channel, I don't know why you would not be subscribed when you get this type of information. When you're done, when it's all said and done, as long as you're subscribed to this channel, when there are opportunities, here's my guarantee to you, when there are opportunities like this in front of you, your eyes will work and you will never miss them again. As soon as you saw me do that, you hang around here, that's the type of trader you will become, I promise you. Okay? You will be able to identify trading opportunities like that in the blink of an eye. Because this is what happens. Did something else happen? No. An advanced bullish bat pattern happened. And you see how it reacted. So That's all I got. Like the video, subscribe, share it with a friend, a fellow trader, share it in your communities. Let's kind of bring down some of the anxiety and some of the things that people are talking about. The market is doing what it needs to do. Just unfortunately, it is being driven by some different type of fundamental news that we're not that used to, but it's not the end of the world, people. Relax. We'll be okay. All right. Give me a thumbs up. Subscribe if you're not subscribed. Turn your notifications on. You guys take care in the market. Be safe. I'll see you on the next one.